Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone and welcome to another edition of our weekly podcast. My name is Ravi and I'll be your host for this podcast. Global equities witnessed a broad-based decline after weaker than expected economic data raised concerns on the health of the US economy. Data released during the past week showed that manufacturing PMI still remained in contraction, while the US economy added fewer jobs than expected by the market, while the previous month's jobs data was revised lower, alongside the unemployment rate staying elevated at 4.2%. The S&P 500, Dow Jones and Nasdaq Composite fell around 4 to 6% over the week. Asian equities trended lower, dragged down by North Asian markets, with the Korean market down about 6%, Taiwan and Chinese market falling by 3% each, driven by sharp foreign outflows, while Thailand was the only market with a substantial 6% gain during the week. On the macro front, China's economic data remained mixed as services PMI fell in August, while manufacturing PMI rose above the 50 level. Back home, Indian equities consolidated after 3 consecutive weeks of gains. After scaling a new all-time peak during the week, the Nifty index pulled back sharply on Friday to end with a weekly decline of 1.5% amid weak global sentiments ahead of the crucial US jobs report. Broader markets outperformed the Nifty index, with the Nifty mid-cap index down 1.3% and Nifty small-cap index down 0.2%. Among sectors, FMCG was the only sector to end the week in green, while metals, energy and telecom were the worst performers with cuts of over 3.5% over the past week. The Indian fixed income market had a stable week, with Indian government bond yields falling marginally over the week as investors awaited the US crucial jobs report and the domestic inflation print to be released next week. The 10-year Indian government bond yield closed nearly flat for the week at 6.85%, down just 1 basis point, while the 3 and 5-year Indian government bond yields fell 2 basis points each. The INR fell 0.1% against the US dollar over the past week to close at 83.95. A stronger dollar demand from domestic importers negated the positive impact of a weaker US dollar, lower US bond yields and crude oil prices, and improving foreign inflows into domestic equities. INR gold fell 0.1%. Brent crude oil fell nearly 10% during the week to settle at $71.1 per barrel as investors weighed the potential impact of rising supply and demand uncertainty after economic data released in the US showed weakness in the manufacturing sector and a weaker jobs market. Coming to macro updates for the week, the first was on India's manufacturing PMI, which eased to 57.5 in August of 2024 compared to 58.1 in July, as manufacturers recorded softer increases in new orders and output during the month, even though rates of expansion remain elevated by historical standards. Meanwhile, input price inflation eased to a 5-month low in August, prompting manufacturers to increase raw material purchases to build safety stocks. Output cost inflation was the second fastest in close to 11 years. Business confidence fell to its lowest since April of 2023. The second update was on India's services PMI, which rose to a 5-month high of 60.9 in August 2024 from 60.3 in the month of July. New orders grew the most since April, with finance and insurance posting the best performing, mainly boosted by domestic demand. Employment increased at a decent pace despite slowing to a 4-month low. On the price front, input prices rose due to higher food, labor and transportation costs, but the inflation eased to the weakest since August of 2020. As a result, output cost inflation slowed, business sentiment weakened to a 13-month low. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.